James, if you had gone long in here with your 1 tick stop or 2 ticks or 3 ticks, you would have been stopped out. I'm still in the trade. But I also have the benefit of having annotated the example too, right? But this is a good example of when you get up here not to get too cute. And the idea that this market is going higher is not invalidated or even the setup invalidated by going along in this area unless this is entirely retraced. But this is a perfect example of why I will tend to give these things some breathing room. Troy says he went short and he's still in the trade also. Well, you're about to get stopped out, Troy. I have that on very good authority. Okay, now let me ask you a question. Let's say you entered in here because you just know this thing's going up. You've got conviction, you've got the balance area, it's on top of another balance area, it's all the things that Tom says to do. You enter in here and you put your stop 3 ticks below the low, not 1, not 2, 3 ticks, and you get stopped out. So what do you do at that point? Is that idea invalidated? No, it wasn't. And this is going to happen to you a lot. You're going to get in trades. You're going to put your stop somewhere. You're going to get stopped out. And then the market is basically going to stop right there and sit and balance again. And if the trade has not been invalidated, go back into it. Do it at least one more time. Now, there's a fine line here, and I realize you don't want to get stubborn. You don't want to get angry and revenge trade and all this stuff. You're still trading market condition, and you have to be flexible enough in your thinking to understand you're trading an auction process, and you can only put so fine a point on it. And you may have 4 or 5 trades in a row that work exactly per the book, but then you're going to have 4 or 5 in a row that don't act per the book, but they would have worked, but you had to work for them. And this is sort of an example of that. You know, this is a nice ideal setup, except it turns into something less than ideal because it doesn't behave per the form sheet. But it's still, you know, this market is still spending time in this area. It's not rejecting this area. So it's retraced into here. But if I get stopped out here, if I see this going on, I will go back in. And now I'll put my stop below the low of this bar. Because at that point, I'm saying, okay, here's the line in the sand. I get it. All right, that's fine. But now, really, we've sort of rejected this, but we really haven't completely rejected it. I'll go back in because the conviction is up. There's really no conviction down. This is two-sided trading. We're building value, and this is understanding markets and market time. Time and price equal value. They equal acceptance. So this area now up in here is being accepted to a degree that it had not been prior to this occurring. And since you have conviction up here and you have conviction here that's holding, and you have some two-sided trading in here, you're accepting this level. So this is two-sided trading. It's not the nice pristine balance area type of box that you have in this larger structure. But that's just the way the market is. So I'll go back into this trade. Now let's say that I'm in this trade and the market has appeared to break out. This is a 30-minute bar. Where do I put my stop? If I got in this trade, hold on, let me get my tool here. Let's say I bought this thing back right here. And this time I put my stop here. And, you know, the market dipped down again and took out all the people that had one tick stops below here. And then this is sort of a false breakout trade, guys, on a small degree. And we will talk about the false breakout trades and trade setups in another session. But this, you know, this is sort of a false breakout situation of a minor degree, which are very, very powerful signals, by the way. So, okay, so this thing takes off, and I'm here. I've got a profit in the trade. Where do I put my stop? Would you put it here, Raj? Now, and there is some, there's no one right answer to this. I'm not going to give you a road answer because there's not one right answer. I'll give you some wrong answers, though. You don't put it here. You certainly don't put it here. And quite frankly, I won't put my stop here. I'll put it, you know, just above where I got in because it surely should not retrace 2 of these 30-minute bars if it's breaking out for real. So I will sit and I will live with what happens next. Now remember, this is a 30-minute bar. Now if this thing turns around on a dime, and this is going to happen, guys, it's going to happen. If this thing turns around on a dime and trades straight back through here, then it takes me out. I just lose money on the trade. That's just the way. It just didn't work out. Even if it turns right back up and goes up, which is also going to happen. Everything that is annoying that is not inside the box is going to happen. Trust me. The only thing you have control over, and Karen and I were talking about this last night, and it is really true. The only thing you have control over are your actions. And the most important thing you can do is to be consistent. Now, I am one, I tend to use looser stops than maybe a lot of people. My stops, you know, there are acceptable stops that are tighter than stops that I will typically use. That's personality. But I will wait and let the next bar begin to trade. I want to see what's going to happen before I'll move my stop above about here. I'm not going to lose money on this trade, but I'm not interested in making a few ticks. I'm not trading for ticks. This is a nice balance area. The initiative move out of this should be pretty substantial. So, Christine, to answer your question, I don't start moving my stop immediately. This is a really good sign, and I'm hopeful now this trade's going to be, you know, this is going to be that really nice trade. But I'm going to sit back and I'm going to wait and see what happens. Okay, now I'm doing some online shopping. Always a bad sign. Now, if I'm in this trade here, and I've got this wide range bar up and this wide range bar up, this is really starting to look like a nice trade. But now, the other thing is, you know, initiative, you know, the initiative trades contain balance, just like, you know, of varying degree. So I'm not going to freak out if this is the top tick and this thing begins to balance some. So I've got to be careful to give it a little bit of room, you know, to maybe do this sort of number before it takes off again. So I'm going to move my stop up now somewhere in here. And this is entirely subjective. I cannot give you an exact formula to move your stop because remember, we're trading market condition. I just know on the second bar up that if this is the trade that I think I have, now I'm going to move my stop up. I don't want to see this market go all the way from here back into this range. It should not do that. And I'm willing to be stopped out even if I have to reassess and go back in because the market ends up doing something like this. And that's going to happen too. Kim, you asked a great question. Did you take some off at 3 times risk even after straight up bars? Yes. If I have multiple positions on, if you get to 3 times risk, and again, Kim, this is not a formula, but you're going to be fine if you consistently take partial profits at 3 times risk. Believe me, yeah, you are. You're going to be fine if you consistently take profits at 2 times risk, partial profits. And I my thoughts about this is that especially initially when you're trading these things and you're beginning to get a feel for things and how the market trades when you're in a trade, your perception of things has this funny way of changing when you're in a market versus when you're out of a market. And you're going to make or lose money based on your perception when you are in trades. So that's the reality of your trading business, is your perception when you are in a trade. And if you get in a trade and you have multiple contracts on, it's okay to take profits at 2 to 1 your risk. It's okay to do that. And this is a great point, and this gets into actually what topics that are going to be covered more extensively in the last session we do, and it's an important topic. It's the topic of the finer points of money management and expectancy and things like that. But yeah, if you take, you're going to be okay if you're taking 2 to 1 reward risk trades. Now, I don't want you to take that and construe it into a scalping technique where you're risking 1 point in the S&P to make 2 points. That's not going to work. And the reason it's not going to work is it's just there's not enough room in there for it to work over time. But in a situation like this, where if you risk $100 on your trade and you have 200, 250, and you have multiple contracts on, either, and this is a situation, Kim, where you can just outright take something off, or you can then you can put your super tight stop under that partial contract that you want to take off, and you'll be surprised how often you'll get a good surprise, a nice surprise, and you can just trail a tight stop on that portion of your position that you're going to take off. So there are a number of ways to deal with that. Now, remember, we trade market condition, and we're reading the market through this lens of auction market concepts. And when a market breaks out of a balance area with conviction, there are really 2 possibilities. It's going to continue in the direction of the break, and hopefully, and quite often, if not usually, it will do so sharply. Or you're going to get a false breakout that will reverse through the breakout point and trade sharply through the balance area range. This is the false breakout trade. And actually, these are fantastic trades. These are the highest probability trades that you can take. You could make a living. This is there's several trades you could absolutely sit on, so to speak, let them occur, and you can make a living trading them. And this is one of them, a false breakout trade. Robert, you say, if you hit double top, which is one contract, why write it back down? If you're trading one contract, Robert, you've got to trade, you've got to be more, first of all, it's difficult to trade it's more difficult to trade one contract than 2, 3, 4, 5, or whatever, because you're forced into making a decision, an all or none decision all the time with your money management. If you're trading one contract, I think the best thing to do is when you hit 2, 2.5 to 1 reward to risk, start trailing a really tight stop. Okay, my goodness, what's happened to all my goodies that I was going to buy online? I'm out, and anybody that was long should also be out. Now, do I want to go back in? Do I want to buy this again? It looks like it's got a little tail here and it's traded back up through here. So do I want to buy this again? No, I'm not going to buy this again. My working assumption now is that this is a false breakout. And if my working assumption is that this is a false breakout, what am I going to try and do? I'm going to try and get short, right? So do I get short right now? You say no, Raj. Why not? Yeah, it's at best, it's not ideal. If I get short now, I have two choices. So if I short this market here, I either put my stop right here, which is a long way up there, or I've got to guess at a stop somewhere between here and here. And that's what it would be. It would be a guess, wouldn't it? So the better part of valor here is to be patient and see if I get some sort of setup. Now that may not occur. This market can just completely continue to trade sharply through this balance area. And I'll be forced to make a decision when it gets down into this area, whether to just jump on board and then under an assumption it's going to trade initiatively and put an initial more or less disaster stop somewhere up here. And that's going to happen. I mean, I will do that. But instead of entering here, it's too vague. If I'm going to have to play the card of being vague, I would rather do it at the absolute last moment than here. I might be able to find something that sets up before this thing just completely craters through this balance area. So I will wait. Remember, you have an infinite amount of opportunity. You have a finite amount of capital. You can afford to miss this or any other opportunity.